Do you feel that you need yourself a Forex doctor? If you do, I've got some really valuable information I'd like to share with you right now. Hi Forex traders, it's Andrew Mitchem here, and I'm the owner of the Forex Trading Coach, one of the biggest Forex education companies online today, with a 5-year history of teaching clients all around the world. Now, I'd like to talk about psychology within trading in this session, because it's something that's really underestimated, and I've had quite a number of requests from people on YouTube comments, and also from non-clients and also from clients to talk about the need for a Forex doctor, or to talk about the psychology behind trading and the importance of it in order to be a trader who can make money consistently and over a period of time. And it's something that's underestimated. You see, when people jump into trading, all they want to do is they want to understand how the charts work behind me here. They want to understand candle patterns and news and all those things, and that's really important. But if you don't have the mental stability in terms of being able to take trades, when to pull the trigger, when to exit a trade, when to stick to your plan, if you can't do that, then a lot of the other important things become watered down, because you've got to have a strong mindset to trade, but you've got to be comfortable with your trading system. So the whole psychology behind trading, especially when you're talking about trading with real money, it hurts you when you have losing trades and you see your account going down and you see negative trades. It really does hurt you. And it affects you in two ways. It affects you up here, and it affects you in here. It affects your head, and it affects your heart and your emotions. There is no question about it. And as I've mentioned, it's a very underestimated but very important part of being a successful Forex trader. So we spent quite a bit of time with my clients yesterday on our live 2-hour trading room sessions talking about the importance of psychology within Forex. And there's a number of things that I'd like to talk about, because to me you have to be comfortable with the strategy that you employ. You've got to have full confidence in it. It doesn't matter what that strategy is so much. It means that you have to be comfortable with its style and its approach. So it needs to be something that suits your personality. Now, it's the same when it comes to the time frame charts that you choose to trade. If you're the sort of person that likes to trade real short time frames, then great, go for it. But don't be placing trades on weekly or monthly charts. Likewise, if you're the sort of person who likes to just look at your charts once a week or once a day, then you need to be on those longer time frame charts. But again, it's what suits you. We had a question on the webinar last night from a client who is saying to me he had an 80% win rate, yet he wasn't quite happy with his trading. And it was because he was feeling that he was being so picky with the setups that he was missing out on a lot of trades that he was like 50-50 with, but unable to pull the trigger. And I suppose there's two ways of looking at the solution there. First of all, an 80% win rate's outstanding. So my first suggestion was don't change too much, because an 80% win rate in terms of picking good trades with high returns is excellent. He could potentially look at increasing his risk per trade. He could also look at trading other markets, non-Forex markets as well, because he was predominantly looking at daily charts and 4-hourly charts. Now, of course, you don't have to stick to Forex. If you have the right setup as a technical trader, you can branch out into other markets if you wish to. The other thing I suggested he could do, and again, it's more of an experiment because it depends on the individual, would be to drastically reduce his risk per trade and then take trades that he was sort of 50-50 over, and just see over the course of a week or a month what the performance would have been. Because it's not until you try taking extra trades, if that's what you need to do, if you're frightened to pull the trigger, if you need to take extra trades, then just try them. I wouldn't necessarily say do that on a demo, because you don't get the same feeling. You need to have, if you're already trading live, and this guy's been trading for about 3 years live, you need to get the feel of losing or making money on a live account, but just really reduce the risk just as an experiment to see what would happen. So really it comes down to, are you comfortable with the style of trading? Are you comfortable with the time frame charts that you're trading, or the range of time frame charts that you're trading? Are you comfortable with the returns that you're getting right now from your trading? Are you comfortable with knowing when to exit a trade, or first of all, knowing when to enter a trade, knowing when to exit a trade? Do you look at closing part of your positions? Do you close all your positions? Do you just set and forget? Do you edit and alter your positions depending on what's happening? Do you add to your positions? You know, there's so many different ways of trading, but it needs to be a plan that you have in place and you are comfortable to stick with. So I hope that helps with the whole overall understanding of the psychology behind trading. The other couple of things I want to mention is my new look website is now live, and I've had some fantastic feedback from that, so I hope you like it. If you have any comments, good or bad, just drop me an email, andrew@theforextradingcoach.com, just to let me know what you think of the site and the new design. And lastly, on the markets themselves, yesterday I was suggesting a lot of strength in the New Zealand dollar. That is exactly what we had. A lot of money was made by my clients yesterday buying the New Zealand dollar against the US, against the yen, against the franc, against the Canadian, selling the euro New Zealand, selling the pound New Zealand. So some great money made, and a lot of people commenting on the webinar that we had just about how those New Zealand dollar trades were working really nicely. Today I'm looking for some strength in the British pound again after it's been a little bit flat. Against the US, the pound has now broken the strong resistance level of 1.70. So the 170 level, very powerful level. Round numbers, horizontal lines are hugely powerful. It's now broken that level, so right now I'm anticipating the British pound to be increasing in value and to use the 170 as a support level now. And today I've actually taken a buy trade on the pound against the US dollar, and with a bit of euro weakness I'm selling the euro against the British pound because the strong 80 level, 0.80, is now has now been broken, and we're now below that level, so the 0.8 level should now in theory become a strong resistance level, looking for the euro British pound to continue further down. So I hope this webinar and podcast has helped you with your trading psychology and a little bit of an insight into the market, the way I trade, and the way that I can help you as a Forex coach. So this is Andrew Mitchem from the Forex Trading Coach. Have yourself a fantastic weekend, and I look forward to talking to you this time next week.